Welcome back, investors, to Ticker Time News. I'm Adam, and I had a technical difficulty. Oh my goodness, I just could not get this thing going to save my life. I had to shut everything down and start everything up again. So hopefully it's working on your end. It seems to be, but let me know in the comments if it's not or whatever, and we'll try to fix it. But it's a live stream, so things go haywire sometime. All right. The market today. What I want to do is run through a quick rundown of what happened, why it happened. I want to go through a few individual stocks. I want to look at the 11 S&P 500 sectors. I want to check the weekly expected moves and see how we did. Okay. And of course, the most important thing about this live stream is your questions. Thank you, sir. I'm glad it's working now. Goodness gracious. All right, so ahead of this weekend, the stock market opened on a softer note before early highs saw the S&P 500 actually break above 4,000 points. It got to 4,012, and then it stopped, and then it petered out. And the major indices were actually moving mostly sideways off of their highs until around 11 or so a.m. Eastern time. Then selling conviction, that picked up. The market continued with a steady decline, but lifted off its lows just before the close. So that was promising. Now, despite the softer finish to the day, each major index is up week to date, with the S&P 500 up 2.6% on the week, the Dow Jones up 3.3% on the week, and the Nasdaq up 2% on the week. That was a very encouraging sign. Okay, ahead of the open, there were some economic releases that came out, not very many, very limited, but they did play a role in the existing global growth slowdown narrative. We had the preliminary July PMI data from Japan, Australia, France, and Germany all show weaker than expected results. Additionally, the July preliminary, so it's not the final reading, but preliminary IHS market manufacturing and services PMI data for the US came in weaker than expected too. Now, the services PMI number, it clocked in below 50, which is the dividing line between expansion and contraction. So that means services are contracting. That's a sign right there. That's a key sign. People are paying less for services. Interesting, right? All right, now compounding. I guess I should ponder my words. Compounding growth concerns from the economic data was the earnings report, and warning shot heard around the market from Snap. Oh my goodness. Snap, ticker symbol is the company's name, SNAP. Yesterday in the after hours, we talked about this, the Snap apocalypse. It is upon us. They lost 39.1% just today because the company had worse than expected earnings and decided to provide no guidance due to, quote, uncertain operating conditions. Yep, no guidance. This dragged down other companies that benefit from online advertising, including a favorite of mine, the Trade Desk. It was down 7.3% today. Ticker symbol is TTD. Yeah, as well as some major mega caps like Alphabet, which lost 5.7% today. Meta Platforms, which lost 7.6%. I'm sorry, the Google Alphabet one, I think it was 5.8. If I misspoke on that one, I think it's around 5.8. Meta Platforms 7.6. Now, also today, the mega caps, they underperformed, and they were heavy drivers of where this market went, which include Apple and Microsoft. And that was again, a big directional driver for the broader market. It has been. The Vanguard Mega Cap Growth ETF, ticker symbol is MGK, that closed down 1.8%. And you compare that to the 0.6% loss of the Invesco S&P 500 Equal Weight ETF, ticker symbol RSP, and the 0.9% loss in the S&P 500. So yeah, these mega cap stocks, they are driving the market. And it wasn't all bad news. I know it sounds like it so far, but there were some bright spots. American Express was a bright spot. It was up 4.6% today, and it was outperforming after it reported better than expected earnings results. Now, this morning again, buyers weren't completely deterred by the weak economic data and disappointing earnings results. Shortly after the open, advancers led the decliners by a 3-1 margin. Advancers by the same margin at the Nasdaq voice too. Oh, come on. Okay, I think it's back working again. Oh, shoot. All right. Things together now. A little duct tape, crossing your fingers, a little luck. I think it's on our end. I think our internet is having a little wobbliness or something right now. Okay, let me keep rolling. We're going to get to the charts here. I'm just about done with my notes here. It was just real short. By a 7-1 margin at the New York Stock Exchange and an 11-5 margin at the Nasdaq. Now, 8 of the 11 S&P 500 sectors closed in the red, with losses ranging 4.3%, communication services, and 0.3% industry. Oh, man. And often caused by an unstable internet. All right. Will you stay up for me, please? Okay. Oh, come on. All right. Okay. Let's just skip this and get right to it. There's a couple of stocks that I want to look at, and then I want to look at the S&P 500 sectors, okay? I'm just going to skip what's on my notes because I don't know how long this is going to stay up, and I want it to stay up. So let's do that. First, let's look at Apple. Well, first, let's start where we are so we don't mess anything up. At least we're on one page. S&P 500 today, okay? We broke out of the weekly expected move yesterday. This is the daily view. Today, we came back down and we closed just a few little tenths of a percent above the weekly expected move. I mean, this is pretty neat if you ask me. So today we closed at 39.60, and the top weekly expected move was 39. I'm sorry. We closed at 39.61, and the weekly expected move was 39.60. So literally less than 1 point, and this was accurate. I think that's pretty darn good. That is pretty darn good if you ask me. Now, next week on the 27th, that's what this purple vertical line is here, we have the FOMC meeting. So next week, Monday and Tuesday, the market is going to be very volatile. and not know what to do, because everyone's going to be anticipating a 75 basis point rate hike on Wednesday. And whether the Fed stays hawkish or pivots or becomes a little more dovish. Okay, there's three options for the Fed. 75 basis point is what we think we're going to get. And that comes out on Wednesday of next week. So Monday, Tuesday, it's going to be a wishy-washy in the market, unpredictable. Wednesday, whatever the Fed does, well, it's going to decide what the market's going to do. And that will reflect the rest of the week. Okay. So that's why I have this line here marked. All right. Let me go to the SPY. Let's just do the indices, then we'll do the stocks and everything else I have. Okay, so on the SPY here, the weekly expected move was 395, and we closed at 395. You can't get any more perfect than that. I'm sorry, 393. Man, I've got the jitters right now, if you couldn't tell, because of this internet problem. Things seem to be working okay right this moment, but yeah, it's just got me messed up. The weekly expected move for the SPY was $393.93 per share. We closed at $395.09. That's a few dollars off, right? Yesterday, we closed for the SPY at 398.75. So we had a pullback today, coming back to the top end of the weekly expected move. In a market that has no guarantees for anything, this is as close to that you can get to a guarantee as possible. And it is accurate 68% of the time. That's the important part. So on Sunday, just like we did last Sunday, we will come out. I'll give you the weekly expected moves for the upcoming week. I'm sure it's going to be an interesting week with calculating those out because of the FOMC meeting and the decision on rate hikes on Wednesday, the 27th. So investors on Patreon, you will get those on Sunday. So you've got a heads up on what to expect this week and where the market could move in either direction, up or down. If you would like that information, plus a ton more, trade setups included, click the first link in the description. Okay. I just want to point out one more thing here. Yesterday's high was 398. Today's high was 400.8. Might just have to give up on this one. All right, internet, come on. Hold it together, please. Oh, man. Okay, so that is a resistance line that you can draw on the chart straight across. SPX 4,000 and the SPY 400. It's a psychological number, and it is strong resistance. And that gets you, if you can break above it, remember over here, and let me get the highlighter. On the volume profile over here, there is a dip right here, okay? And that dip is basically, if you look over here to the right, this red candle right here that I just highlighted, that empty space on the volume profile is that one candle. So if the SPY can break above 400 or the SPX can break above 4,000 with increasing volume, then we should be able to ride all the way up to at least on the SPY 405 to 408 because it's very light in there on resistance, okay? Resistance doesn't kick back in until that 408 line, and that's this section right here on the chart where we had consolidation between May the 27th, right? The FOMC meeting and the rate hike is the 27th of July. And then June the 8th. That's how long it lasted. We could see that coming into this week. A move sideways, maybe, you know, between this week's high on the weekly expected move at 393 to 400. Maybe a $10 swing. Call it 390 to 400. Until we get some clarification from the Fed. And then, you know, the market will either go up or down based on what the Fed does. All right, let's keep moving on here. We got the Nasdaq. It was down 1.7% today. It closed back within its weekly expected move. Also, I didn't point this out on the Nasdaq here, but I will point it out on the Qs. Where it stopped at is very interesting, okay? But the main point is it fell right back down into its weekly expected move, and it closed within that range. Let's go to the QQQ. Load here for me. Good. The Qs 2 days ago closed above the weekly expected move. Yesterday, it continued to climb. Today, we had the pullback, and it closed at 301.99. The weekly expected move was 300.73. So again, like the SPX, less than 1 point away from the top end of the weekly expected move. 68% accuracy rate on the weekly expected moves. So we got that one too. But the area where it stopped is interesting. We have a volume profile spike right here where it stopped. And that also lines right up to the middle of this section right here where we had all that consolidation and just bopping around, chopping around up and down through that May 27 all the way through June the 9th. So we could potentially be lining up for a very similar move of just chopping around sideways, because remember, expansion leads to contraction. And what did we have this week? We had expansion. And since expansion leads to contraction, you could probably bet at least half of next week, we're going to contract all the way up until Wednesday afternoon when the Fed makes their announcement and we get a little more clarity through September. Because there's no meeting in August because everyone's on vacation. And just a little note here for the Qs and the Nasdaq and the S&P 500. The S&P 500 and the Dow Jones, August is the worst month historically for the stock market, for the Dow Jones and for the S&P 500. For the Nasdaq and for the Qs, it is the second worst month of the year historically. So we have that going for us for next month. Okay, so expansion leads to contraction. We expanded this week, so we should get some contraction potentially, right? Maybe with this pullback that started today. All right, just real quick, the Dow Jones, we'll show that here, and then we'll go to the DIA, where we have our weekly expected moves. Breakout this week, pullback today. You got this line right here at 32,290. That's the base of here, right before the shoot up and the real hard fall of that consolidation. So we got that to look forward to. All right, the DIA, that is the ticker symbol. It closed at $319.06. The weekly expected move, $318.99. Literally 7 cents off. Again, you can't get any better than that. 7 cents off. Now, for the ticker symbol DIA for the Dow Jones, this red line right here, it did not quite tag that today. There is a little room left. That's why I'm thinking we could get some choppiness next week that leads to the base of this big contraction area up here. And we just kind of move around in this area until the Fed meeting on Wednesday. And Wednesday afternoon, the big announcement, right? All right. So that's the Dow Jones there, ticker symbol DIA. Let's keep going. Let's look at the Russell. That thing was down 1.6% today. I don't have a weekly expected move for the Russell. All I can point out, though, is that it tagged its resistance line right here perfectly, and it pulled away from that resistance line. It has done it several times this year in 2022. Click this button, tighten it up, and you can see that right there. It does not like that resistance line. So, again, moving averages, resistance, support, weekly expected moves, all lines on charts matter. All right, let's look at the dollar today. The dollar was flat, okay? It didn't move today, and it is stuck right on its 20-day moving average, which is bullish, even though the dollar has cooled off and the dollar has pulled back over the past few days. It is still in a bullish context. And the reason I'm looking at the dollar is because when the dollar is strong, the S&P 500 is weak. That's how it's been for several months now. All right, so that's why I'm looking at that. Okay, let's look at a couple of individual stocks, and then we'll look at the 11 S&P 500 sectors, plus a few others like semiconductor, retail, and so forth. So I'm going to start with Apple, AAPL. Look where Apple closed in the weekly expected move for where we expected Apple to close. Apple closed at $154, and the weekly expected move was $155. So yesterday, Apple closed just above that weekly expected move. And typically, at least 68% of the time, nearly 2/3 of the time, whenever a stock or indice moves above the weekly expected move or below the weekly expected move, by the end of the week, 2/3 of the time, it's right back in the weekly expected move range. So when it pops out to the upside, that's a good time to short. When it pops out to the downside, that's a good time to go long. It's as simple as that. It's also there to show you when to take profits, when to get in and exit positions. Very simply. If, for example, it pops out down here, right? You go long, and you can ride this thing all the way to the top. And then if it pops out, that's when you take your profits. So that's one way that you can use the weekly expected moves in your trading. Okay, so that's Apple. Let's look at Microsoft. MSFT is the ticker. And remember, you can chart right along with me at home. There's a link in the description of this video that takes you to TradingView. Click the link, sign up, and it's absolutely free. Doesn't cost a penny. Okay, Microsoft, it ran up right to the weekly expected move. Yesterday, it closed at 264. The weekly expected move is 265. And then today, it pulls back right on and closed perfectly within the weekly expected move. Okay? All right, Microsoft has earnings coming up next week. It's in 4 days. It'll be very interesting how Microsoft is doing. Remember, Microsoft was reported this week that they were slowing down their hiring and cutting some funding. So a lot of information next week for Microsoft. And we should get a pretty decent move, either up or down, depending on the numbers that come out. Okay, let's look at Tesla. TSLA. Tesla had a big day yesterday, nearly 10% in the single day. Now, with that giant move, which caught me a little bit off guard, I thought analysts were going to be a little more soft in how they approached Tesla's earnings, but they were not. They were very encouraged by Tesla's earnings, and that helped Tesla to gain 10% or nearly 10% yesterday. Okay. It closed outside of its weekly expected move. So here's where it should have closed, right at $778, but it didn't. It closed above that at $816. Okay. So this is that 1/3 of the time, you're 1/3 when it doesn't work, right? Just a little more. Okay. 32%. Would that be it? Yep. 32%. 32% of the time, the weekly expected moves do fail. But that 68% of the time win rate, I'll take that any day. Now, Tesla stopped at a very interesting point here on the chart. The high today was 842. It pulled back from that. If you see this red line that's up here at the top, if we follow that to the left, we'll come over here to the base of this area. Okay? There are some people who are trapped right within this area. There were 3 green candles. One of them was a 4.7% swing to the upside. There's some investors trapped there who want to get out. So that's why when Tesla ran up to the base of that, it got some selling pressure put on it and the brakes were stopped. So that is a key area of resistance to watch. Tesla needs to get through this. They need to close above it and then march on from it. That would give you a good indication of a move higher for Tesla. But again, we had a lot of expansion this week, even from individual stocks. If we look at Tesla here, we can go back to the 13th of July. That was a bottom there. And Tesla then ran all the way up to yesterday, or you could even count today. So that was a big rally from Tesla. Okay? A big rally from Tesla. Let's see. Let's look at it NVIDIA, and then we'll go to the indices. NVDA. Stupid? No, you're not stupid. Why? I knew I should have taken AXP's earnings with a grain of salt. Their clients are mostly upper class. I bought calls on support and got smoked. Oh no. And they said most of it came from travel. Interesting. Well, we take our defeats and we learn from them. And we march on from there. As long as we're learning, a defeat is okay. Just like that. I can't help it but do the highlighter on the screen when I want to actually move the screen itself. All right. NVIDIA. Okay. NVIDIA closed outside of its weekly expected move. Semiconductors this week, they were on fire. All because of a bill in Congress that could put $52 billion to work in the semiconductor industry here in the United States. Building out capacity, all kinds of things, right? But it's $52 billion. It's moving through Congress right now. It's in the Senate. It's making its way through. If the president signs it, that'll be a huge catalyst for the semiconductor industry. The expected move, or on the top line, was 166. NVIDIA closed at 173. Now, yesterday's high, let's look at this. The red line going across there. Yesterday's high was 181. If we come over here again to this same area right here, got to get the highlighter again. This same area right here, this is a big sell area. There will be a lot of selling pressure here. This is tough resistance. That's why NVIDIA stopped where it did, and we can see that very clearly in how that matches up perfectly one for one. Okay? All right. While we're talking about the semiconductor space, let's go to ticker symbol SMH. That is the Van Erickson Semiconductor ETF. Did a weekly expected move for that this week. And you can see, when we talked about this even, this downward channel that it's been trading in for a while now. It just, let me clean this up a little bit. There we go. This downward channel, it gets to the top of that channel and it hits resistance and it comes back down. What's interesting about what it did, and just give me a second, it lags just a little bit. If we look at, I almost have it where I need it. Oh, I did the darn highlighter thing again. I'll learn one day. I'll learn from that. Okay. It popped out because this was a huge bull run here for semiconductors. I mean, look at this. You go back, you can go back to the 13th of July where it just took off, or you can even go back to the bottom of the channel down here on the 5th of July and just rode this thing all the way up. It was a big, old, powerful move. However, once it broke above its resistance, what did it do? It pulled right back down. But it's very interesting that it closed right on it. Is this a back test? And then maybe next week it's going to bounce off of that and start going and moving sideways to the FOMC meeting on Wednesday? That's a possibility, right? If we go back and look at the one other time that it broke out, I guess it's two times that it broke out. The very next day, no, just one time, it broke out up here. The very next day, it sold off right back into its trading channel. So I do find it promising that it did not come back into the channel to close, and it closed outside, kind of using it as support. That would be very, very constructive if it does remain above that and start to move sideways. Because remember, expansion leads to contraction, and we've had a lot of expansion right there. All right, let's go down the S&P 500 sectors. First, we're going to start with XLP, which is consumer staples. 11 of these, and then I have 2 others, retail, that I want to look at, and regional banks I want to look at. Okay, closed right within its weekly expected move. It barely did anything. Come on. Oh, there we go. Hold it together now. Okay. We had expansion. Expansion leads to okay. Hold it together. We had expansion. Expansion leads to contraction. We've been contracting now for several days, going all the way back to the top of this expansion, which ended on the 28th of June. Okay, so we've got that there. All right, moving on to the next one. XLU, which is utilities. And again, it closed right within its weekly expected move, almost dead center. We've got a flagging pattern here. What this could do is we had expansion. Actually, we could go back a little bit further. We had expansion to the downside. Then we had expansion to the upside. And then we kind of have this contracting as it's moving down in this flagging pattern. That could actually lead to expansion to the upside. That could be a bull flag right there, a very bullish development. And that's utilities. And economic slowdown, right? Growth concerns. Sometimes people want an area that is a little more stable, although it hasn't been so far. All right, let's go to XLK, which is technology. Check this out. Technology yesterday went above its weekly expected move, okay? Now, with all of these, they are in a bearish context, okay? They've been moving down all year. Energy, that's an exception, even though it's had some weakness lately. But in the shorter term context, these are a little more bullish. If we look, we had a low down here, right? That was the low for the year. Then we have a higher low and a higher low, all right? We haven't gotten really a higher high because we had this high, but then it was a lower high and then a higher high, okay? So what this was more of a symmetrical triangle type setup here that led to it breaking out to the upside. But it closed right on its weekly expected move. As a matter of fact, let me clean this up and we'll go in a little closer here. Historically, how has Microsoft done in a recessionary environment? Microsoft has sold off. Microsoft has been weak because historically their products have been software that you buy, you install on your computer, all right? When businesses are not expanding, okay, excuse me, when businesses are not expanding, they're not buying new computers and they're not buying Microsoft software to install on their computers. That's how it's been historically. However, Microsoft is becoming more and more cloud-based, okay, with Azure, cloud-based, with all of their products being online now. Like you could say Gmail and how that is a cloud, and all of the products that go with Google, okay? Microsoft is going in that direction too. So their data center business should hold up well, even in an area or in a time frame when growth is contracting. And then you have Microsoft in the gaming world. Well, historically, people had to buy physical games for their Xbox. Well, now that can be done online. But again, with growth slowing down, people, even though it can be internet-based now, may not spend their money on gaming. They may cut back on that. So Microsoft historically hasn't done as well, but there are some interesting developments that should be taken into account this time around that are actually positive for Microsoft. Plus, Microsoft has a strong balance sheet. That's why they're making a gaming acquisition when we're going into or already potentially in a recession. So some quick thoughts there just off the top of my head for Microsoft and how they are in a recessionary environment. Okay. And again, any questions, throw them in there. We can talk about them. Any questions at all? Okay, technology. The weekly expected move on the top was 136.83. In technology, it went out yesterday. Today, it came right back down. These lines act like magnets and closed at 137.22. So less than 1 point difference. I hope this recurring theme of how well these weekly expected moves are is coming to your attention. Okay. And again, we give these to our investors on Patreon every single Sunday. Last Sunday was our first go around at it. This Sunday coming up, we'll be giving it out again. All right, let's look at XLR, which is real estate. Let it load here for you so the lines can pop up. All right, again, it closed within the weekly expected range. It closed at 42.26, and the top line was 43.13. Not much to say here about real estate. It did make a higher low, and it did make a higher high. So even though this is in a bearish context, see, we got the low there, we got the higher low, we got the high, and a higher high. Those are good developments in the short term, in a very small window. But when you open it up and look at the big window, it is still in a downtrend. So just keep that in mind. The weekly expected moves are there to help you when these are moving. All right, let's look at healthcare. Ticker symbol is XLV. Healthcare has just been contracting for a while, going back to June 27th. Healthcare has just been contracting and moving sideways. Weekly expected move to the upside was 133. On the down, it was 126, and it closed at 129, practically in the middle. All right, let's look at XLF, which is the financial sector. And remember, banks do not like an inverted yield, and that's what we have, an inverted yield. The last time I looked up the data, which was just a couple of days ago, 44% of yields were inverted. That's quite a bit. Okay. Me again, using the highlighter there, not learning from my mistake when I want to move the chart up. Okay, so we have the weekly expected moves here, and you can see that the financial sector, which are your JP Morgans, your Morgan Stanleys, your Wells Fargo, this broke out above of the weekly expected move. It also broke out to the upside of its trading channel. It broke that resistance. That trading channel has been there going back to middle of March. So yesterday, it closed above the weekly expected move, and the weekly expected move on the upside is 32.75. Where did it close? It closed at 32.75. Oh my gosh. You can't get any more accurate than this. It just blows my mind. It just blows my mind. And all of our investors on Patreon, you have that list of the weekly expected moves. You can verify that I'm not making this up. I didn't just put these lines on there today and say, oh, how close can I get to where it closed at? No, no, no. All right, let's go to XLY, which is consumer discretionary. That sector was down 0.5% today. And we get the lines here. You can see it popped out 2 days ago. Okay. It popped out to the upside 2 days ago. The weekly expected move was 150 and it closed at 154. So just under 4 points difference there. Now, it ran into an interesting spot of resistance here. If we go back to that cluster of days that started on, this one goes back to the 27th of May, all the way through the 9th of June. That area is going to have resistance. And that's where it got stopped out today, right at that point. So that's going to be a little bit difficult to break through. With the expansion that we had this week, right? Expansion leads to contraction. I'd expect Monday, Tuesday, beginning of Wednesday, at the very least, to have some sort of contracting happening. Just choppiness moving sideways. All right? As a matter of fact, for the majority of sectors, indices, stocks that are out there, that's what I expect for Monday, Tuesday, and the first half of Wednesday anyways. Just choppiness, moving up and down, moving sideways, waiting for the Fed meeting. That's on Wednesday. All right, XLI, which is industrials. Let the lines load there. All right, yesterday it popped out to the upside, and it also then popped out of its resistance area today, but then pulled back. It closed within its resistance area, but it did close slightly above the weekly expected move. The weekly expected move on the upside was $90.08. It closed at $90.45. So just about 35 cents-ish difference. Again, you cannot get any more accurate than this. All right, let's go to XLB, which is materials. And then we only have 2 more sectors left, and then 2 other areas that I want to look at, retail and regional finance. All right, so we had a big move here in materials, breaking out to the upside of the week. And there I go again, using the highlighter when I move the chart up. Oh, it gets me all the time. All right, big, powerful move here. And if you, let me bring this back down now that I pulled it up a little bit. You can see that materials has not been steady. All right. It's like scientists in a lab trying to come up with a new type of material and just going haywire. I mean, boom, expansion. I guess you could call that a little bit of contraction. Again, expansion. I mean, expansion, big time expansion. And then again, we've just been marching up and down and up and down and again up. Where's the contraction? We're missing that. That's a missing piece here. Materials have been very volatile, and it's not a place that I would want to be trading in right now because of how crazy these lines have been moving. Okay? So materials, it's not a place for me, but you can see here, if we go back to this bottom hit on the 14th of July, It is just almost a straight up move. Okay. It was down 0.7% today, but it is above its 21-day moving average, but it is below its 50-day and 200-day moving averages. So it is in a bearish context. Overall, it's a downtrend, just like with everything else that we've looked at. All right, let's go to XLE. That is energy. It was down 0.8% today. Energy obviously has been cooling off. 2 days ago, energy was rebounding. It popped above its 20-day moving average 3 days ago. 2 days ago, it popped above its weekly expected move, and then it pulled back. It closed right on its 20-day moving average yesterday, and then today it tried to bop around, but it ended up back under the weekly expected move. Here's how close this one is. The weekly expected move is 71.83. It closed at 71.15. Very close again. Very close. All right. With energy, okay? Energy is in a bullish context, not a bearish one. It has an area of resistance. Let me fix the chart here. All right. I'm going to tighten it up here so we get a broader look at this. It's got an area of support. I might have just said resistance. My apologies. An area of support. This blue line that's going up and to the right on the screen. Yes, there is a bit of a lag time here for it. All right. These 3 green circles on that blue line are 3 different times. There's actually a 4th one I skipped over, of where the energy sector has come down, pulled back, bounced on that line, and continued up. Okay? It's happened 4 times. It came very close to hitting that line on the 14th of July, but it was just shy. It's got a long wick. It's a reversal candle. Okay, remember, a reversal candle will have a long wick on the bottom and a candle on the top, and either a tiny wick on the top or no wick on the top. That's a reversal candle. It happened, and energy reversed, fell below that 200-day moving average, popped right back above it, and it is now holding on to its 20-day moving average as like a little cup handle here, or a little ladle or something, holding energy up. That's bullish, okay? That's bullish. As long as it doesn't go under this blue line right here that I have it extended out into the future, energy is bullish. It breaks below that blue line and closes below it, that's when you start thinking, okay, this is now starting to get a bit on the bearish side. But right now, energy is still bullish. And as long as energy goes up, so does what? Inflation. When energy came down, remember, it hit this peak here on June the 8th, right? And then it just pulled back from there. It had gotten overextended, and it pulled all the way back to the 14th of July. Now it's bounced from there, and it's holding above its 20-day moving average. Again, like a little ladle or something, holding it up. As it goes up, so does inflation. Now, this lowering here of energy, that will show up in the CPI report. Maybe in August report. And we could see August potentially for CPI potentially come down a bit, because commodity prices, they fell, even though right this second they are starting to move back up again. They did fall, and that pricing has to work its way through the economy and then show up in these lagging reports. Do you see a reason why energy would start moving up again? Yeah, the fall and winter. Energy prices go up in the winter. I know we're still in July. We're about to get into August, which is summertime. But then we get to September. And we get to the 20th, 21st of September, and then we're in the fall. That's what is going to drive oil prices, gas prices, energy prices back up. So in the short term, we could see more of a pullback in energy. But in the longer term, we have a problem with, we're going to have a problem with high energy cost as we get into colder weather, because the heat's going to be on. We have Russia still in Ukraine. If Russia were to pull out of Ukraine and things would kind of get back to a new normal, that could settle energy prices during the winter instead of having them go up. But fall into winter, that is when prices for energy goes up higher. So that's the biggest reason for why I would see energy moving up again. But again, we're going into August, so we still have a little over a month and a half before we're into fall, and temperatures start slowly going down. Okay. As a matter of fact, if I clean up this chart a little bit, take those off. Let's do this. I'm going to go to a weekly. Actually, I'm going to go to a monthly view. All right, let's put this together a little bit. So we've got some history here. All right, so there's kind of like this average area, and it's almost like right where the weekly expected moves are. So we got spring. So this peak right here is this this is in July. This peak here. What month is this? That's July. That's a peak, July in 2014. Okay, so what was this other big peak over here? June of 2008. Okay, so got the highlighter. So that's 08 in June, and this is 2014 in July. Okay, so let's go back to where we were. And I'm going to take, let's see, February here, December, November, October, September. Okay. And then this bottom right here, February. Okay. So what we have is, once we reach December, prices start falling. So from August to September, prices are elevated. Actually, it's kind of like July. This is July through November is a high. And then this bottom here is April. And then the high is February. This low is August. This high is January. This low here is January. This peak is December. This peak is May, and then we have that peak. What was this peak? This is January. October, another peak. The bottom is June. The peak is March. So, you know, even though prices are all over the place here, that's October. The peak is April. The bottom is July. Top is May. Bottom is March. Okay. So oil prices all over the place. Not oil, I'm sorry, energy. The energy sector. Energy sector. Prices are all over the place, but we do see highs in the midsummer. So we have July and June as kind of like peaks. And then it's like January and February are peaks. That's my takeaway, just historically, going back to, what would this be? 08. So a financial crisis that led to a peak here. And then we have in 2014 insolvency. And then the third peak, which would be in 2022, that's a war in Ukraine. So whenever there's a crisis, energy peaks. But now that we're back down here within this kind of median price range, which would be like from there to like maybe somewhere in there as like a median price range, we're right in the middle of that. And if we peak in January, February, and June, July are our peaks, then we're in a peak right now. We're fading down from that June, July peak, and then we'll start heading back up for a January, February peak, and then start heading back down, and then back up to a June, July peak. All right, just a quick kind of back of the napkin there. I'll clean this chart up later. I don't want to take up more of your time. Okay, let's see here. XLC is our next one, communication. Google was a hard one hit in this. Meta Platforms. Do I still have my internet? Or did I not click on it? All right, there we go. XLC. All right, just take a minute for the chart to load here. We got going back to the daily view. Open this up a little bit and make sure my highlighter is not on. See, I finally learned from my mistakes. Okay. Closed within its weekly expected move, kind of like right there in the middle of it. This thing has been moving sideways for a while. The resistance here is going to come in. I should have put this line up here already. Right here, this is where resistance will be. All right, come on, catch up with me. Oh, it seems to have frozen and locked up. Man, this internet today is hurting me. It's hurting me. Okay. All right, let me get this lined back up right quick. Okay. This is the resistance line that it's going to hit and run into. Obviously, it got nowhere close today, but in the short term here, it is making, almost kind of like a higher low, almost, but it's really just contracting and moving sideways. So nothing interesting happening there yet. It's just moving sideways. All right, we already looked at the dollar. We already looked at semis. I'm going to go to regional banking next. The ticker symbol is KRE. We did a weekly expected move for this. And again, man, just like so many that we've looked at, and only one more left, new PC coming. We've got the weekly expected move at 61.89, and it closed at 61.21. So again, it's got a bearish context. It's moving down, but we just came out of expansion. Now we're going to have contraction is what my guess would be, especially leading into the FOMC meeting. Okay, XRT, which is the retail industry. This is a retail index. So again, an overall bearish context. Short term, we just had expansion. I'd expect contraction next. It is above its 50-day moving average now. That's important that it did that this week. It broke that and closed above it. It closed the week at 63.76. And the weekly expected move was 63.12. Wow. Just wow. Okay. I know that took much longer than it should have. Much longer than I was planning. My apologies for the internet being soft today and having a mind of its own. But that's everything that I wanted to go through. I just wanted to look at those weekly expected moves with you and where these different products close the week. So that way we can all be open and transparent about it and confident in them that 68% of the time they will close within that range. You could almost look at it as your risk range. If it moves out, it typically will come and move back in. We saw that multiple times going through all these different products. And if, again, we release these on Sunday for all of our investors on Patreon. If you would like to get weekly expected moves so you can stay ahead of the game, trade ideas, top 10 stocks in 4 different categories, which we've got an updated list coming out this evening. Click the first link in the description. Join us. We'd love to see you there. Okay. Any other topics that you want to cover, talk about, we can do it. Or we can wrap this one up. And investors on Patreon, I do have a note that I'm working on. I'll put it out tomorrow morning. It's kind of just like a it's like a big picture view of the market. So it's like I'm stepping back, looking at the whole thing, and I'm talking about the market from that perspective. And I conclude with it on what all these different signs that we see in the market mean. So that's coming out tomorrow morning. There'll be an updated top 10 list coming out this evening, later on this evening. And then Sunday, we will have the weekly expected moves for the upcoming week. So a lot of stuff to talk about over the weekend for you guys. So I hope you enjoy it. I think I'm good for this week. Yeah. What a week, huh? Okay. Well, then I will see you in the next video, which will be Monday after the market closes. Unless I do a standalone video, it's actually been a while since I've done one of those. So maybe I'll release one of those tomorrow too. But yeah, investors on Patreon, you guys have a lot of stuff coming up over the weekend for you. So enjoy it and have a wonderful weekend. And thank you so very much for being here with me. If you could, click that like button and share the video. That greatly helps a small channel like this. And thank you again. And I will see you guys in the next video. Take care.